Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. You're with us here on a fresh new edition of Midcap Radar. The market is doing not very much at all. We're down about 30 odd points, and this week so far has been that way. Monday was a steep correction. Yesterday was a little better. Today we're down again. Let's see if the market is able to hold on to that 10,500 mark. So far it has been able to, but things could change. The only thing going for the market is the fact that maybe there has been a fair bit of pressure on the downside already, which has happened in a very short time span. So more very soon on the downside maybe a little bit of a lesser possibility. The only index which is doing well, and it's actually the index for the week, is the PSU Bank. I don't think any other index is going to come close, even though there are two more days left. The PSU Bank index is up, I think now, what, 8 or 9% over the last 3 trading sessions. With me is my colleague Anisha Jain. Anisha, hi, afternoon.
Hi Prashant, afternoon. Yes, let's see whether that Nifty is able to hold on to that 10,500 mark or not.
That's the story list for today. We'll spend time on some of those in a bit, but let's quickly get Ashwani as the top of the show as always, both for his perspective. Ashwani, good afternoon. I mean, so just there, 10,500 where it was, I guess, at 11:30 when we last chatted, but your sense?
See, the consolidation continues while we are below 10,500, but not substantially below. So chances are that by the close, something will put its hand up and will be able to close above 10,500, but still broadly weak markets. I think PSU banks are still continuing their upside. So Canara Bank is a buy with a stop of 250, target of 264. Bank of Baroda is a buy with a stop of 136, target of 148. And Indigo is a buy with a stop of 1150, target of 1200.
This move in PSU banks, Ashwani, what's your view?
See, it's a trading move based on SBI results, etc., but unlikely to develop into something bigger.
Okay, but when these moves come, they can themselves be quite meaningful. So do you think this is one of them?
15%.
Yeah.
See, the point is that everybody says it's better than expected since expectations were already negative. So, with that 10-12% moves can happen, but I think there is way lower to go for these PSU banks. For the moment, what's in trouble looks like the NBFCs, because consistently through the day there's been selling on NBFCs.
Okay.
The private bank space and the metal stocks are also selling off a little bit, Ashwani. Anything there?
See, all of these spaces were outperformers. Now that people have sold the bad quality stuff, chances are they'll now get after the good quality stuff and things which have held up. So that way, a lot of private banks, Kotak, IndusInd, Bajaj Finance, etc., are now beginning to come under pressure. Reliance is at lows of the day. So the second leg of the fall may be led by large caps.
Okay, Ashwani, thank you for joining us with that perspective. But moving on then and on to an exclusive now, Udyan Mukherjee caught up with Lucy McDonald of Allianz Global Investors as part of a special series, London Eye. Let's hear what she has to say about her sectoral bets in India.
I think the biggest geopolitical issue that, as I mentioned, is trade. Because that's the one that can have the biggest impact on overall global GDP. One area in particular focus is the technology area, because there are big, long supply chains which go across the world, which can be affected by this. So that's one area we're looking at. Within that context, however, and if that is one of the biggest risks to growth, India looks relatively well placed because it's got such a good domestic focus, and that, I think, from the global investors' point of view and emerging markets investors' point of view, means that they will go to India when they're concerned about some of those big worries globally. So in fact, India can be a relative beneficiary of some of that, particularly in the technology sector, where there is a very strong domestic and international growth potential, and companies which can compete on a global stage. And that, for us as global investors, is what we're interested in. I think what's changing there is for the Indian companies is that the end clients for all of them are demanding higher value-added service, and they are changing the scale of the projects that they are asking for. And that so means that all companies need to be able to provide a lot broader services than they did in the past. So it's not just a question of outsourcing or even consultancy. It's a question of delivering very wide service offerings and digital transformation projects which are taking enterprises and moving them completely into a digital space. Specialists in the area like the jewellery space, and that looks to us to be one which has got quite good demand growth. Even some of the areas which are sort of slightly lower growth are seeing slightly better prospects now in the rural areas, like some of the food companies, which have been a little bit depressed, but that seems to be picking up now. But there's huge potential, structural potential for consumption in India, and it's finding the companies which are both there and externally which are really able to benefit from that.
Okay, so bullish on consumption space, that's the word coming in from Lucy of Allianz. Do remember to catch this entire conversation at 8:30 tonight only on CNBC TV18. Okay, those are the numbers of Bajaj Electricals flashing for you on the screen. Remember, the profit looks optically lower at just around 7 crores versus our expectation of 57 crores. But that is because the company has reported an exceptional loss of around 86 crores. Otherwise, if you look at the top line, that looks healthy. The top line has come in at 1,596 crores, and that compares with our expectation of around 1,400 crores. So not looking too bad as far as the top line is concerned. It's only the profit that is looking a bit lower, and that is on account of an exceptional. I'll wait by to see what the segment performance is, as well as how the margins shape up, because that will be the important thing to watch out for. Other than that, in terms of the segments, both the EPC segment as well as the consumer segment seem to be performing well to me. 644 crore revenue for consumer products versus 610 last year. Even on an EBIT basis, the consumer products performance has improved to 37 crores versus 25 crores. So I don't see any reason why the stock should react very negatively, except for that one-time loss of around 89 crores. But overall, Prashant, the numbers look good.
Oh yeah, I mean, I was looking at the stock performance as well. It's done very well. For the year, it's up 25%. Right. And this month so far, of course, is not going so well. From a high of what 705, 706 rupees, it's lost about $100 from there to where it is now. But nothing to complain from where it has come up. I mean, December of 2016, this used to be 200 rupees. It's 600 now. So I don't think one can really complain, of course, unless you've gotten just that high. We are going to move away from Bajaj Electricals, and maybe we get the management to speak about the numbers in a bit. But the big story which broke over the last hour and a half is essentially the cabinet clearing the IBC ordinance. As we were reporting, disqualification under Section 29A, those criterion have been relaxed. Home buyers may now be considered as financial creditors. Ritu is joining in with some of the more finer points here. Ritu, over to you.
Thank you, Prashant. Well, these are some of the details that have been reported by our colleague in Delhi, Timsy Jaipuria. We understand that the cabinet has cleared the IBC ordinance, and of the 13 to 14 key recommendations that some 2 to 3 we've been able to confirm have been cleared by the cabinet. Most important of these is the treatment of home buyers. In the ordinance, we understand from sources that our colleagues have picked up that home buyers will now be treated as financial creditors. This is a relief to cases like the incident case that we've seen. They will be allowed to make representatives at the committee of creditors meetings, but there is a caveat: in the event of a liquidation, they will be treated as unsecured creditors and not really as secured creditors. The other big exemption is coming in for MSMEs, where we understand they will be exempt from any restriction under Section 29A, which is to say promoters of MSME companies can bid for their companies. The third change that has come in, and this was widely spoken about, is the voting share for Nord to give nods to resolution plan. That has been cut down from 75% to 66%, making it easier for the lenders to pass resolutions, regular resolutions in these committee of creditors meetings. So these are the three changes that have been approved by the cabinet. There could be more. We'll hear more about them later. But some of the important ones that everybody's been waiting to hear about is termination of IBC as well. Anything on that from the cabinet will be keenly looked out for. Other than that, any sort of further relaxation in Section 29A for other than just MSMEs. That is also something that we'll wait and watch for.
GVK numbers are also at the bottom of your screen. So revenues have halved, lower that 3 crores compared to 7 crores. Net profits 23 crores. There was a loss of 206 odd crores, which has come through. But we'll, I think, need to spend some time looking at these numbers a bit more carefully.
Yeah, actually, because it's the other income that is higher, and that's why the total income should be around 28 crores, and they have reported the profits of around 23 crores. So, yeah, I really need to look at what's going on in these numbers, because on the look of it, they just look a bit strange.
I don't know if there's any interest in names like GVK, etc. now, but we'll spend some time looking at them. Look at the stock. It went up 8, is now up 4, it's 11, 12 rupee stock now. Okay, the other one which is seeing pretty wild moves is in the pharmaceutical space, and talking about Strides Shasoon. Pre-results, the stock was about 500 or so. I mean, the day before the results. It sold off to 100 handle, close to, didn't quite get to 300, I think 320. It's back at about 400, 430 now. And all in the span of the last couple of days. Amay Chalke of HDFC Securities is joining us on the phone line. Amay, just run us through, not quite what the stock is doing, but what's really driving it in terms of this sentiment. Huge disappointment, people buying in at lower levels. I mean, what's going on?
So, as you're aware, that 2 days back they had given their 4Q quarterly numbers, and there was big miss on the EBITDA and the PAT basically. So this was largely driven by their US business, which halved from 42 million in 3Q FY18 to 20 million in 4Q FY18. So obviously, during the management con call, management guided for the softer first half of FY19, which led to the severe earning cut for the FY18 numbers for the street. So that was the main reason why stock went down to 320. And later on, it bounced back because obviously, even on the revised earnings for FY20, it was looking cheap.
So, I mean, that point is taken, but what's your sense as far as the US business of the company is concerned? The management has guided for a ramp up to around $120 million. Do you think the company will be able to meet that guidance given the pricing pressure that we have seen?
So, FY17, they ended with 120 million kind of a top line in the US. However, their quarterly top line was around 20 million for the fourth quarter. So we are expecting they will be able to generate around around 40 million in the first half of FY19, assuming this quarterly run rate continues. However, they have 15 product approvals in the pipeline for the FY19, and that could lead to the 120 number in FY19 basically.
Where is it trading now, Amay? And just put this in perspective with other businesses which are comparable.
So at this point of time, my EPS is around 18 rupees for FY19, and FY20 it is around 26 rupees. So it is trading around 22, 23 times on FY19 and around 15, 16 times on FY20 basically. So it is obviously 20-25% discount to the comparable peers in the generic market.
And I mean, just on that, it would. Are there other considerations? I mean, what's your call actually? Let me put it that way on Strides. Do you have a buy?
So we have maintained neutral because there is still lack of clarity or visibility on the US side. We need to see how this 20 million top line of the US business will move for next few quarters. Then we will revise our estimates going ahead. For now, we have downgraded stock to neutral. Because there would be some selling which would come in from the existing investors, which will keep the stock under pressure.
The numbers, the revised numbers, etc., new expectations, when in your conversation with funds clients, is there doubt on whether they'll be able to even make those numbers?
At this point of time, obviously there are few doubts. But I guess if company execute their new strategy very well going ahead, I guess their confidence will be back.
And any word on the institutional side of the business? Do you see that growing in the coming quarters?
So that is likely to be a flat year-on-year for next year, considering there is a sharp increase in the API prices for the ARV, and the malaria business, they have not been able to get like the top line has shrunk significantly in the malaria side.
Well, we are seeing a sudden slip as far as the market is concerned. The Nifty is down about 60 points now, down to the level of 10,475, and that slip actually has been led by the Bank Nifty, because that one is trading in the flat, actually just went into the red territory as we talked. So the Bank Nifty now at that 25,770 level, and the Nifty seeing a bit of slip. We'll keep...
This is happening as we speak, so maybe we can look at what's contributing, how much, if we can put that plate up, because the drop is precipitous. I mean, look at what's happening. We're at the day's low, pushing lower. When we started at 130, the market was at about 10,500, just about there. I mean, actually even higher than 10,500. It slipped shortly after that, and we're down to about 10,477. So it's not a large sell-off or anything of that sort, but I mean, the fact is that it's lower, and it's the lowest we have been today so far. 10,473, and dropping as we speak so far, and that's essentially the contribution played and what has moved this hour. So it's metal names, but that's a mid-cap mover. I mean, I think we should do the same for the Nifty as well. Reliance is the top contributor. It was at the day's low even at 130 when we began. ITC is adding about 10 points on the downside. Index points, HDFC Bank, HDFC, between them, the HDFC Twins, 15 and other index points, pressure coming through. So 10,470 odd, 65 lower on the Nifty, and we'll track this and we'll have some flashes up to reflect what's going on in the market. But I think we have Anisha Timsey with us to give us some more details that she's picking up on that IBC ordinance story that we broke. Timsey, over to you.
Yes, as we rightly broke down the story, the Cabinet has approved today an ordinance in the IBC. And what we pick up from sources is the fact that when it comes to MSME, the recommendation of the Insolvency Law Committee to give a special treatment during the resolution process has been accepted, and they should be exempted from all conditions envisaged under Section 29A of IBC for bidding for their companies under the bankruptcy proceedings has been accepted, except where they are barred for bidding due to willful default. Now, the second relief which is coming under IBC is for the home buyers. Home buyers will be given an equal treatment of creditors. And what I pick up that when it comes to the recommendations, all recommendations of the Insolvency Law Committee regarding home buyers have been accepted. That is to be treated at par with financial creditors, and they should be given a right in the waterfall model under the Section 53 of IBC. The committee has recommended insertion of this provision only by way of an explanation in the definition of financial creditors in the Section 2. So this implies, to be precise, that the representatives of the home buyers will be there in the Committee of Creditors, and they will safeguard the interest of the home buyers when it comes to the bankruptcy proceedings, the IBC proceedings, in cases where home buyers are involved. Now, there are some of the recommendations which have not gone through also, which are quite important right now. When it comes to the Section 29A, that is disqualification, has to be revisited, that has been rejected. That is restricting eligibility test only to applicant and connected persons. That reference, the suggestion was to delete that reference, but yes, that suggestion has not been accepted. On the other hand, also the trigger threshold, there was a recommendation to reduce to increase the trigger threshold from 1 lakh to 10 lakh rupees. That has been also rejected. Also, when it comes to the interest on the interim finance to continue for up to 1 year from liquidation, that has also been rejected. But a major approval also there when it comes to the voting threshold of Committee of Creditors. The share, the not for resolution plan when it comes to voting share has been reduced to 66% in critical and 51% in routine decisions.
Got it, Timsey. Got it, Timsey. Thank you very, very much for that comprehensive wrap out. We're completely out of time, so we're going to say goodbye. Thanks very much for staying with us. Your stocks will take the action forward.